Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry. Today is Friday, May 14. The time is around 2 a.m. GMT. Today we're going to be looking at the chart of oil. This is oil futures, the front end contract, 45 minutes chart here. We can see that oil ended with one rally over here. This is the intermediate degree. So now it is in within the wave 2 pullback, and the wave 2, as you know, is corrective. It should be in the sequence of 3 or 7 or 11 swing. That's a corrective sequence. So over here we are looking at the first 3 swing, which could be completed soon, which is in the form of a zigzag 3 waves or 3 swing ABC here. Right, so once we complete this 3 swing, and we have already reached the 100% extension as well of that 3 swing, we should be able to either finish the entire correction with 2 or at least finish this cycle at least, right? As long as it is corrective, it's going to be always in corrective structure, and therefore will not break below this 161.8. If we break below here, this can become a 1, a 2, and then a 3 to the downside. But as long as it is corrective, it shouldn't go past below 61.6. We should be able to get some sort of support soon, with or without another leg lower, right? With or without another leg lower, we already reached the extreme area. We can start to see a reaction higher anytime soon, at least to correct the cycle. Okay, then only time can tell, are we gonna go to new high already from here, or we're gonna be doing what we call a double correction or double zigzag. Now a couple of things here we can take a look at to get an idea about some of the possibilities, right? So if we take a look at the 4-hour chart here, this is wave 2 in blue, the same one in blue that we see in the 45 minutes chart. So we are now doing the wave 2, which should be ending pretty soon according to the 45 minutes chart. But what I'm trying to show here is the idea of the cycle, right? So if this is wave 1, or we ended 1 in the intermediate degree with the so that 1 here is subdivided into 5 waves. So this is 5 in the minor degree. So that means, what that means is we are in some sort of 5 waves. So this is your 4 right here, right? 1 2 3 4 5. This is your 3, and this is your 2. 1 2 3 4 5, and this is your 1. So you have a diagonal coming up from March 24th. So that is the cycle we are looking at here in the shorter cycle, which is a 5 ways up as a diagonal. And so now we are correcting technically in the wave 2 in the intermediate degree to correct this entire rally from March 24. And as long as this correction, so technically, yes, if you look at the shorter cycle, this is sort of the immediate level that we are concerned about. But if you look at it from the higher degree time frame, then actually the real key level is going to be this March 24, which is kind of down below at 57, right? But as long as we stay above here, technically we are still expecting more upside, due to the idea that we are calling it this way. This is the label. Now another potential, so there are so many, I mean, there are still a couple of different possibilities. Again, Elliott Wave is like a game of chess. It's not a one path. People always believe it is one path. It is never going to be one path. Understanding the various possibilities make you a better trader and able to manage your risk properly, right? So another possible thing is this way. Now when we are correcting this cycle here, this you can use retracement to give you an idea how big of the correction is it is right now. Now this is only 38.2% correction. Now wave 2 can go all the way. There is no limit into how big the pullback can happen, right? In the wave 2 it can go to 50%, can go to 61.8%, so it can go to many things. But if this is really corrective, then it should not be an impulse down from here. In other words, it shouldn't be something like a 1 2 3 4 5. Now if you start to see 1 2 3 4 5 with a very extended wave 3, then maybe you should reevaluate again to see what's going on. But as long as we believe it is corrective, then it doesn't matter. Even if we're going to be doing a bigger, deeper pullback, you're still going to be finding support every time it reaches 3 swing, because that's what a correction is, right? Corrective in nature should be always in 3 or 7 or 11 swing. So this 3 swing here, right, should be finding support soon then, if it is correction, and then we should be getting a bounce at least. Now if we fail to go higher, like I said here, if we fail to go higher, then that means, okay, maybe we are not ready to finish with 2. Then it can do double zigzag like this and do another 3 swing, but still it is going to be in the sequence of 3 and then another 3, because it is correction, right? And so it can do something like that, a double correction, and then end with 2, maybe somewhere deeper, right? And before it turns higher. Now another thing that makes things a little bit more complicated is the idea that in reality we have not broken above this one. This is March 8, which is the high in oil. March 8 is kind of the high in oil for a while, since 2000, yeah, so 2021, so 2 months ago, right? Since then we've been sort of we are now, if this is a wave 1, then what we believe is that we are taking the more aggressive view, calling this correction is finished. Now the rally has been quite strong, almost breaking above here, so technically I think that makes sense to believe the correction is over. But from technical point of view, until you really break above this previous peak, you still cannot rule out even something like this happening, what we call another bigger double correction from the March 8th, right? So then, I mean, I can come up with a count. I can come up with, for example, with 1 2 3 4 5, and then this is just a correction, and then we go down again in a big, sell off into the next 100% extension from March 8, right? But we decide, based on the correlation and so on, we decide to take the more aggressive view, and basically if we call it 1 here, then that means we believe this is a complete, it's already completed the correction. But we understand that until we actually break above March 8, we can always do double correction. And remember guys, trading is all about risk management. It's not about making a hero call and keep saying, gold is gonna crash, or oil gonna rally. No, we need to adjust when the market adjusts. We believe the market is dynamic, and we have to understand the path of the market, and that's the way a trader really is. We are not really 100% knowing every single move in every single time frame, right? But we understand the possibilities, and then if we need to make adjustment, we adjust, and we always manage our risk properly. So here, therefore, that is basically the update for oil, right? And if you do want to get regular updates on commodities, indices, forex, cryptos, stocks, do feel free to check our service. We have 14 days free trial. The link to the trial is provided in the description of the YouTube video. So I'll see you all again next week. Have a nice day, everyone.